Found Homies. Happy June. We're going to jump right in this month and we're going to skip the talk about interest rates, mostly because they're just not really going to change that much. The Feds came out today and said they will not be increasing rates, which actually puts some more confidence in the market. And we're seeing rates somewhere in the mid sixes, maybe low sixes, depending on the loan product. But what we do know to probably be true is that we're going to see these higher interest rates for a little bit longer. So we can watch them monthly or daily. But at the end of the day, what we're going to just hope to see is that a long trend of rates coming down. So on this graph, you can see the waves of the market because we know real estate goes up and down. And on those waves up, there's thrill, there's excitement, there's euphoria. But what's ironic about these times in the market is that they actually present the most financial risk, right? So we saw this pre-2008 when people were buying things that they couldn't afford. And we've seen this a little bit post-COVID with a lot of the heat that happened in the market after that. On your way down in the wave, you'll see anxiety, denial, fear. These two are my favorite: capitulation and despondency. I don't know that we're quite there in the market, but it does speak to what happens at the bottom of the wave. And here at the bottom of the wave in the market, you will find your point of maximum financial opportunity. And that means, there are opportunities out there. Don't necessarily go out and buy things that you cannot afford, but what goes down must come up. And here in the bottom of the wave, there might be some opportunities out there for you. So you just need a savvy agent out there to help you look for those, which leads me into my next discussion, which is about inventory. We always talk about inventory because it's a real live pulse on the supply demand of the market. We have over 1,800 homes active in Ada County. That's a good number. We started out the year with about 1,300. So more inventory on the market than we have ever seen. And it continues to increase during the summer months. Absorption rates are staying right about 1,300 per week. So buyers are still out there buying, but they are not coming in droves along with the inventory. So if demand stays flat and we see inventory go up, potentially what we could see is a little bit of pressure on pricing. That is great news for buyers. There are more options out there for you. For sellers, this is just an indication to pay really close attention to price. The price that you set on your home today will either sell your house or the house down the street. So continue to watch these numbers. This may change as we enter into the fall winter market, but as of right now, more options on the market is a good thing. Lastly, I really want to talk about Idaho market specific because nationwide, we're seeing a compression in the market, and you can feel that a little bit in our local real estate market, but there's other things to pay attention to. Idaho leads the nation in job growth. On this graph here, you can see the amount of growth since 2020, since COVID. Idaho leads the nation. And that's not only new jobs for people out here, it's the payroll of those jobs. So we have new jobs for people and they're getting paid more, which is great for the local markets. It's good for our economy. Not shown on this graph is actually that we're number 2 in GDP. Right? Gross domestic product. Idaho is number 2 in the nation. Our jobs are good. Our GDP is good. The Idaho market is a great place to invest. So while you look at opportunities in the market and look at the forecast of our local economy, I think we're in a good place. Idaho has never been a better place to move to and to invest in. This is Michael with your June market update. Thanks for having me.